Anthropic not discussing valuations as they prepare for their IPO. Two execs in 2 days leaving OpenAI. De minimis is Degonagus. Where's the beef? Asked Tyson Foods. Reddit to join the SPX and Applied Material earnings. They're a big old bust. I got Andrew Giovinazzi joining me. We got a big show. Roll some credits. Good morning, everybody. Welcome to the State of the Market Show. I'm Mark Sebastian. I am the founder and CEO of OptionPit.com. Welcome. If you're watching me on YouTube or X, please give us a heart, give us a retweet, give us a like, give us a subscribe, give us a share. Better yet, shoot my team an email, support@OptionPit.com, and join the conversation with the hundreds and hundreds of people we have with us live. As we open the show, markets are flat. S&P up about 8. That's good for 0.1%. Dow down about 29. That's good for, essentially flat. NASDAQ up 53 points, 0.2%. RUT leading the way, up 0.4%. And RSP, our look at kind of the total market, pretty flat as well. So all in all, pretty snoozy day. And I do believe we are heading for a decent amount of snooze in the coming weeks. We're through earnings until NVDA. We have options expiration next week. The Iran story seems like markets have just kind of started to move on. There's still the bond JPY oil issue. But even that, markets are now like, well, if the Treasury is willing to step in, we can feel a little more confident. And so that's why, you're seeing oil, up, it's up today. It's up marginally today, and markets are kind of ignoring it. The bond market. Oh, US 10Y. Thank you. Bond market still hanging around 465 on the 10-year, not doing very much. Kind of stuck in a range. Are we eventually going to make a move higher? Probably, but it might not be until Labor Day. Now, we did have one big earnings last night, and that was Applied Materials. It got clipped on its low. It had fallen about almost 7%. It's currently down about 3%, making a nice little recovery here, and not really having a profound effect on anybody but the people directly in its business. So think like a Lam Research. They're down a little bit with this, but it's not like this is having any effect on like a Micron or an Intel. So, AMAT appears to be just directly tied to, its very specific area of chips. So that's one that we can kind of move on. Now, one that I'm loving is Reddit. You guys know this is a stock that I've liked. I own. I own very few stocks, but I got in on Reddit, basically around the time they went public, and have bought and sold shares against my core holdings, up and down. So when it dropped on earnings down into the 140s, I was buying. And here I expect to be called away on covered calls. I sold at the 185 strike, 190 strike. That being said, you look at Reddit. It's still sitting around $30 billion. I think this is going to be a $100 billion company. This is one I really like. All right, now moving on to, and I wanted to talk one other thing. There was an article in the Wall Street Journal about Bill Ackman's ETF. And the ticker is ACKY. How into yourself do you have to be to make the ticker your last name? Last I checked, Berkshire Hathaway, their signal wasn't BUFT. And he wonders why people don't treat him with the same respect they treat Warren Buffett. But he's on air. He's around complaining about his stock price, and he's complaining about why he's not valued higher. Pretty funny. And $18 a share. You got to look at the holdings. They did just pick up a stock that I really like, Netflix. This is one that he took a leg out. I think it's time to maybe take a hard look at Netflix. Now, my next story is on Tyson, and then we're going to bring in Andrew. Tyson Chicken is in the basement. They're closing down a meat processing plant in Joplin, Illinois. They're furloughing another. The supply of cattle is at a 75-year low. Feed is expensive. Ag is in a huge slump, but, Tyson on the news, they're closing down their plants. Seems to have found a little bit of a bid. But look at the journey of this stock. I mean, you bought this 2 years ago. I mean, you bought this 5 years ago. You are down $25 on a company that pays a 51-cent dividend. One has to wonder where, the solution to high prices is usually high prices. At what point does that enter the realm of beef and cattle? I'm going to have to ask my friend, Cleet the Cattleman, at some point, when does he start raising more cattle? I know Marky Mark, the bull, is now a siring bull. That was Cleet named a cow, a bull after me, which I loved. But the meat industry facing all kinds of problems between bird flu, egg problems, meat. This is a stock, Tyson, that I'm going to be doing a deep dive on over the next couple of days. Probably going to get with Tim on this one because he's my ag guy, my macro guy. So I want you to start paying attention to Tyson Foods. I know it's boring. Meat's never boring, right? Meat. But the meat stock is boring. At a certain point, this is going to start to get interesting. So this is one we're going to do a deep dive on. Speaking of deep dives, let's bring on Option Pit's Director of Education and Head Option Trader. He is Andrew T. Giovinazzi. Good morning, Andrew.
Good morning, Mr. Mark. How you doing?
I'm doing good. So first, I know you're a carnivore of sorts.
They are.
What do you take of this? The Tyson Foods, they're closing a plant in Illinois. They're furloughing one in Utah. Cattle shortage at 75-year low, and yet I feel like the lean red meat thing is a real thing out there right now. What's your when do you start getting interested in Tyson Foods?
Anybody seen Clarkson's Farm on what is it, Amazon or Netflix or something like that? Where this guy, he's kind of a famous TV dude. He buys a farm for a tax write-off,
Mm-hmm.
and people are basically, and then he's basically saying how absurd it is to be a farmer in England with all the regulations. You
Mm-hmm.
basically you have all this land that they charge you a lot of money for, and there was some complaint, but they barely break even every year. Like they don't make a lot of money, like raising cattle, raising. So
Mm-hmm.
I think the U.S. has a very similar issue, right? You've got all this consolidation, you've got regulation. Like who knows all the junk that's going on? Um, but I think we are like a lot of things. We got a regulation problem.
Yeah.
And like not letting the small farmer farm. I think there's a lot of issues there. So, and I think Tyson was maybe the beneficiary, and now maybe not so much, right? Having real problems. So I think that's just part of the problem of just kind of loosening up all the regulations around meat and basically growing food in the United States. I think the consolidation actually hasn't been great. And maybe in Tyson just and I think another problem is labor, finding labor for this for a
For the
lot of like what I would say entry level jobs, right? Entry level jobs.
they're laying off 2,000 people in Joplin, Illinois. So, there's going to be some new labor out there. Um,
So I mean that's the
so
thing. Like what's the so they're laying off 2,000 people in Joplin, Illinois, and but the demand for food is like still there. Like so this
yeah,
is the what's making them lay it off. That's where I'm having the problems on
they
it.
can't
So
get
that's
enough
what makes
meat
me think
processed.
Clark.
They don't have enough meat to process, is what they're saying,
Oh, okay,
because of the
okay.
cattle shortage. Um,
Why?
and
That's insane that we have a cattle shortage, by the
and
way.
because there's a cattle shortage, they can only raise prices so high, so they're not making a lot of money selling steaks.
Right?
Good time to be a local butcher. Sam the butcher.
Or a local
Alice, you're
cattle.
going to take Alice out to a nice dinner tonight, Sam the butcher. Um, so Andrew, I want to ask about this Anthropic and OpenAI thing in a second. But yesterday I was talking about I one of the stories I talked about was Ford is repatriating production of Lincoln cars in the United States. Then last night, a court basically greenlit the extinction of the de minimis tariff ruling. So up until Trump came in office, any product valued under $800 was not subject to taxation, import taxation, or tariffs. The Trump administration wanted to waive that. They were challenged. The court basically said, no, you can do that. So now every product coming into the United States is eligible for tariffs and import taxes, which is part of the Trump plan, right? They want to bring as much manufacturing back. Do you see this as a positive or a negative for markets, or just kind of a neutral?
Yeah, that's a hard one. I mean, I know basically the US government needs to raise revenue, and they would
Mm-hmm.
prefer to raise it on the sales of goods at this point, or what they're calling taxing a tariff to, ultimately, I guess, for the idea being whoever is selling the product has to lower the cost of their product enough to absorb the tariff to be competitive, right? That's, I
Mm-hmm.
guess, the idea for the tariffs. So, and I don't even know what's going on because you see with the tariff thing, all these companies got money back from the government, and then the July budget blew up because I guess everybody has to pay their tariff money back in 1 month. Uh, I don't even like it is. It is so ridiculous at this point. So I think in general, keeping more industry here is probably better. However, capital is going to find a way to go where it's treated the best. Ultimately. So, uh,
I con- I concur.
and then
Now,
I don't know if it's gonna. Will it help Ford? Maybe it'll help Ford, possibly. But you look at what Chrysler, Stellantis. I just kind of
Yeah.
popped up on my list of stocks that are going nowhere fast. Right, like the last thing you
Mm-hmm.
want to do is put cars overseas. I think, but anyway, in Europe at least.
Um. All right. So there were a couple interesting stories. So Anthropic is getting ready for its IPO, and allegedly, the CFO is not talking price of their IPO. Then you have OpenAI. They've had two major execs leave in the last 2 days. We heard Microsoft 70% of their AI revenue is OpenAI. Um, you know, these are two big IPOs coming out. And between you and Frank, you guys have been your ability to find, where the advantages is in terms of policy out of Washington has been uncanny. Um, we've got these huge IPOs coming on. They're partners with the government. What's your take on what's going on in the AI space, and where do you see opportunities?
Oh, geez, that's that's
I
that's
know,
a
I know,
large question.
it
Um,
is, it is.
I think in general it's going to run similar to how SpaceX ran, right? So Tesla ran up into the SpaceX IPO. I expect companies that own these stakes in Anthropic and to a lesser extent ChatGPT is kind of widely held they're going to rally into the IPO and then they're going to sell off. Um,
Mm-hmm.
they're going to go at fairly big valuations. I am seeing that revenues are on the order of $100 billion for both of them right now for ChatGPT
Mm-hmm.
and Anthropic. Um, both, in my view, have to go public because they want to raise some money on this.
Mm-hmm.
So I would say the big opportunity in the short term are all the companies that own stakes in them right now. Now, there are some lesser known ones. Like one of my favorite ones was Zoom. I own some Zoom. Owns a surprising chunk of Anthropic. But there are others. So I think that's kind of where the story is going to happen there.
So, to Andrew's point, this is ASTS. Prior to SpaceX, when the date was announced on ASTS, they are a big supplier to and partner with SpaceX. Look at the run this has leading up to about a week before the IPO, and then starts to give away because people want money to buy the IPO. And then here's the IPO, June 12th. And look at the downward move that ASTS made. No news other than SpaceX has rallied. We will see. What Andrew's saying is you will see something similar with those who partner with OpenAI and Anthropic. That is what Andrew is saying. And Andrew, I could not agree more.
yeah.
And
So
one of the great things is capital gains is going to be, knowing how those things work. I'm sure you guys are going to be involved in that.
we will be discussing that next week. Tuesdays at 2:00. Actually, joining capital gains is relatively it's
Fun
kind
and
of a price.
easy. Yeah.
Um,
So, Andrew, looking ahead to next week, it's a slow week. I think we're going to look. I think we're in line for the VIX to maybe go into the low 13s, maybe even to kiss a 12. We have the FOMC minutes next week, Philly Fed, leading indicators, flash PMI and services for manufacturing services on Friday. So really not much of a week in terms of economic data. And then the only big earnings we have are TJ Maxx on Wednesday. And then the big one for next week is Walmart and Alibaba on Thursday. But there's not a lot out there other than expiration. Is there
right.
anything on the horizon that you see?
I think that's the hard part. We're going into the last couple months of summer. I mean, as a floor trader, I think some of the some of the craziest times we had was the dive of volatility late in August, only to be slapped in the face by mid-September by some problem. And I think that's because people are on vacation. It's the seasonality thing is real. So, do you want to hold a lot of juice, a lot of option premium in the last couple of weeks of summer? Generally not, because people are gone. Like these are a couple of big weeks. And then and then all of a sudden something happens, whatever. And then that low volatility, people get a little more aggressive as you explain to people now with zero DT, people get relatively aggressive. They get complacent because you've had 2 weeks and anything you sell works.
Yeah.
And then all of a sudden we get a little bit of a move and, we saw that a couple of years ago with that yen carry trade that, so this kind of summer complacency is just because people aren't around as much, premiums, and people get more aggressive. So.
All right.
Anyway, that's but I would say yes, we're heading to the 13s, which would be great for me.
Yes. I have said repeatedly, I think the easiest trade right now is I've owned them. I've told people to buy them for the last 3 days. I picked up the August 15 puts for 8 cents. And they're currently 12. And I think there is a decent chance if the VIX does go to 13 next week, those puts are going to trade 80 cents, 90 cents. And, there's going to be some real opportunity there. All right, Andrew, we're up against it, but you are, I want everybody to stick around. I mean, you can roll credits when Andrew's done. Andrew, in your last 14 trades, how many have you won on in capital gains?
Capital gains. Last 15 trades, 14.
Wow. All right. And we're now entering a low VIX.
Yep. And we're rolling 2 more winners. It'll be 16 out of 17.
That's pretty awesome.
Not
Sybil,
bad.
which is your scanner for stocks that are bottoming that may be ready to make a move. With the VIX starting to head lower and markets meandering higher, makes option prices less expensive and really creates some real opportunity for traders to take advantage of some oversold stocks that are starting to rally, right? And you're going to talk about that right now.
That is correct. How there's a kind of like surprise in it, a little surprise, but you have to think like it's hard for Google to go up 40% right now. Okay. Yeah. It's not hard for the smaller mid-cap stocks, which you and I like to trade. Delta Strike, right? All those little sexy stocks, that it's easier for those stocks, harder for Google to move 25. Amazon, how is Amazon going to move 40% to the end of the year? It's not that it can't, it's like it's harder, but it's a lot easier for some of these small.
And you're gonna be talking about some opportunities within these names where you could see a rally in the stock of up to 40% or more. And you've got the data to back it up, and you're going to be showing off the tool that you use to find these names. And so, folks, please stick around. Andrew's going to be showing you the really amazing AI tool that he has built that finds these names. I'd invite you to come to stick around, watch Andrew. So, folks, I'm going to leave you in the strong hands of our own Andrew T. Giovinazzi. I hope everybody has an amazing weekend. I'm Mark Sebastian. I am your only option. Take it away, Andrew.
Thank you. I guess we got to roll the outro, and then we roll the intro. Or we going? I mean, we're just rolling.
Yeah, you just go, Andrew.
We're rolling hot.
All right, everybody. So I guess we're gonna start with hey folks, thanks for sticking around. All right. So again, it's been a good hopefully you can see a screen here shortly. Did I share the right screen? I mean, I don't know if I did, but hopefully.
Yes, you're good. I will go to it in just a second.
So it should be so here's a slide of the S&P 500. So Welcome everybody, and I thank you everybody for sticking around. I plan on making it worth your while. So it's been a good couple of weeks to be a bull. Ultimately, stocks are ripping, and I know Mark just did something last night on. There's the rooster, outside, always outside my window, when I'm doing any kind of presentation, any kind of teaching actually. So anyway, Mark talked about a trade in Trader X, how to trade all-time highs in the S&P 500. I have another way to do that, but right now S&P 500 is going up, and VIX is going lower. So, and after months, we got months of the Iran war still going on. We've got a new Fed. He's letting rates float, and AI earnings, we have a basic period of basically calm growth here right now. But I think that the other thing is, what do you buy? What do you buy when Mark's at the top? And part of what we try to do in Option Pit, well, not try, but I think we do pretty well, is like look for new opportunities. Okay, so like, what do you want to buy right now? So let's kind of go through a little list. So, there's oil stocks, which, by the way, I love. And we'll be talking about that later, but I still like oil stocks because energy demand. This was something Frank was on in Capital Gains several years ago, and it got me to buy a bunch of oil stocks, and I'll always thank him for that, right? But there's a chance the war could end any day, and, or not, right? So oil is still a volatile place right now, in my view. Still a volatile place. Certainly a good place, but it's a volatile place. Okay, how about tech? Right? Well, the Mag 7 has been like, it's peaked and it's dropped back, and now everybody's trying to deal with how much they're spending. Microsoft, I think, is trading close to all-time highs, close to around $500. But for the most part, Meta is off highs, Google is off highs. You have like an overwhelmingly large AI spend. NVDA is now looking for a $500 billion credit facility. Again, that is a new way to finance chips, like, chips as a, basically a rent, a rent inducing commodity right now. Like, it's like buying a house, and people can go buy your house and live in it for a while. And that's what's going on with chips, because the capacity is so big. So again, feels fully valued, right? It's expensive. Okay. So if you don't want tech, you kind of have, what's hitting the headlines. And this is great if you're a day trader, or you have Leisha in Project Net. But for the most part, it hits the headline, and and then the stock is done. So I think, right, the stocks to buy are the ones you haven't heard of, right? Ones that you don't really pay attention to very much, and ones you never read about on Wall Street or see in the the Wall Street Journal. So despite relative obscurity, they're moving 20, 30, 40% in 2, 3, 4 weeks. So the thing is, how do you find those, right? So it would take the Mag 7, to get that. That's hundreds of billions of dollars, or almost $1 trillion in market cap, to have them move 20, 30, 40% at this point. Okay. So what you want is, again, opportunity, especially when you buy options in the short term. You just want these little underground stocks, right, to just have a little bit of a move. But they can move, 10, 20, 30%. So what I want to share with you is the kind of stocks making this move. Okay. And I'm going to bring up a little vocabulary lesson here. And now, but don't worry, it's pretty simple. Okay. It'll be very, very, very easy to understand. All right. So here we go. So how do you target cheap stocks, right, that are going to give me a 30 to 40% upside in 1 month's time? So think about it like this, okay? Warren Buffett, he buys 500 call options in Portillo's. By the way, Portillo's, my favorite place to go eat out that's a publicly traded company, Portillo's. A Chicago place. I ate there for years and years and years. Right? So the thing is, right, a guy like Buffett, he is going to buy calls in something that he wants to own, which he does. He buys calls. I've seen him sell puts and Coke actually when I was a floor trader, 30 years ago in Chicago, when I was first starting out, actually. He basically ruined the volatility in Coca-Cola selling puts, right? But he's going to make a bet of very high conviction. Okay. Now imagine you got 15 Warren Buffetts, each buying 500 call options. So that's 500, 500, 500, 500, right? Okay. There you would be even more confident if you saw many institutional investors buying options. Okay. And this is what I call institutional interest, right? This is a word, right? It's just buying and selling activity as a major players, hedge fund managers, pension fund managers, right? All kinds of what we'd call institutional investors, right? And Warren Buffett, obviously, is an institutional investor. Maybe probably the most famous, right? So if you remember with Delta Strike, that's what Mark looks for too. He is looking for big money. He calls it big money, short-term activity. Okay, what I like to do is look for like a little bit more long-term. So I want to know which stocks major institutions are buying to give me the 20 to 30 to 40% moves I mentioned earlier. Okay, and institutions leave fingerprints for me to track. So for the last 30 years or so, the story is when I first started watching Leaps trade, right? I was a market maker. I would sell Leaps. Why are they buying those calls that are $20 out of the money for 1 to 2 years? And then I would go back and say, wow, those calls are $20 in the money 1 to 2 years later. So they must have known something, right? So I'm like, okay, you can either beat them or join them. So I just decided to join them. Those are called Leaps, long-term equity anticipation products, I believe. So now, what I would say is this is what's giving you institutional interest, right? It's just this line of calls here, right? Because what happened, institutions buy these calls, and what's important is they stay in them, right? That's the important part. So when you're looking at long-term calls, you want to see them stay, okay? You want to see them stay in the call. Because that means they want the ride. And I think that's the important part. So the easiest way is to figure out how to do this. So instead of, what I did is 3 months ago, I launched Sybil, which is an AI-powered data feed that finds all the fingerprints for me. I used to kind of hunt and peck for them. I would look for volume. I would look for stocks that were kind of performing at the lower end of the range, underneath the 200-day moving average, stuff like that, right? But basically, once a stock hits a 52-week low, Sybil starts to track institutional interest, right? So that is the part, like I want to see the stock go down, and then I want to see institutional interest pile in. That is the key part. Now, also, I want to see at least a 40% increase in institutional interest, right? Institutions like trading long-term options because they buy them and forget about them. Now, before I go into the stocks we recently identified or Sybil's recently identified, I want to just go like, Andrew, how do I know this works? So I want to take you back before we launched in March real fast, okay? Because I think this is kind of interesting here. So this is all a bunch of numbers, right? So we did a back test. So I was working on this methodology for, 30 years, but trying to get it down into something where my students can use it to look for stocks to buy. So we did a 4-year back test. 268 stocks fit our criteria of stocks making lows, rebounding, institutional interest, and improving earnings. And it all has to be done in a certain order. So of those 268 stocks, 262 of them went up. And those are the returns of the stocks. Not everyone went up. But and I guess the sample was gigantic, but there's only 268 stocks out of all the stocks we did over 4 years that fit the criteria. Right? And that gave us basically all right, 97% accuracy, which means after the signal was given, the stock went up at some point. And then everybody looked at the back test. I wouldn't say everybody because people were interested and bought it. It's doing well. But this now I can actually, people were like, I don't believe this back test. I don't believe it. Okay. So I get it. It's not the Bible. It was an experiment. We had an experiment. We did a back test. We created a product. And then, okay, so why I'm here now is we started this in March and Sybil started picking stocks. Okay. So I wanted to show you what actually happened. So we had a back test that's given us this, about a 37% average return on the stocks. All right, but let's see what happened now. All right, so this is actually the results. These are actually the stocks that I put out for trade. All right, and I want you to notice, okay, we're about 95% accurate in the stock. So when I open price, then the high price there in this other column, where the current price is, the max gain after we put the trade, after we put the pick out, which is basically the farthest the stock has gone. Okay. And those are the stocks. Okay. I would say the only one I would say that's kind of big techie was Snow, which was actually just a crazy, crazy winner. But what I want to show you is our actual results are lining up pretty well with the back test, literally pretty much the same. So when people were saying, the back test is all crap or whatever, I'm like, well, let's see how it works. So this is a result, which I think is pretty fantastic, which is why I'm just showing you guys this now. All right. So here we go. Here is Sweet Greens, which is a goofy little buyer, a little market. I think Christian likes them. Anyway, stock 39.4% gain a couple weeks. We sold our, we took the profit, sold our calls. Here's another one. Again, another small stock, Teladoc. Got the signal, stock up 42% in 2 months, took profits on the long-term calls. And lastly here, just to give you a little look, here is Snowflake, crazy one, just flew. 44 points, so that was like a 100-point jump in the stock. So the whole point I'm telling you here, why I'm telling you here before I don't want to run into rip zone, but we set out a back test. I set out some parameters based on my observations over about 30 years. Created a product. We ran a back test to try to make sure what I was seeing, I wasn't crazy. And then we actually run the product live, and those are the signals that we're getting, roughly in line with how many trades we thought we would get out of it. Although I think we're going to have a couple. We are likely going to have a couple today. Just because we're running at that point in the earnings cycle. So anyway, so outside of the, hype around Snowflake, right? Harley Davidson didn't invent a new motorcycle, right? And President Trump, he didn't put a Dave & Buster's in the White House. So these are all, again, these are, our returns from the option trades. Right? They all went up for the same reasons, right? So there was some institutional pile-in. They bought a bunch of calls, gave a signal, and the stocks went up. And then real simply, I just took profits in the calls. You could always keep calls longer, right, to have that really insane home run. totally up to you. But again, since we continue to add trades, I'm going to start closing some trades to take some money off the table as more and more trades come in. So anyway, so other investors piled in, which was kind of the plan, right? Other investors have to come in, take the stock up, and then we just take our profits and our calls. Kind of cool. Okay, so what do I buy right now? All right. So I explained basically how a Sybil works. It creates a list of stocks that are following a kind of jumping up and up and up. And it gives me stocks to buy right now. So I've got a handful of stocks on deck that are what I would say getting close to the threshold to trade. So, but as a thank you for just sticking around, I want to give you one stock for free that is close to becoming a trade for us. Okay, and this stock it's Medtronic. Now, you like Medtronic? I will say a lot of medical device companies are showing up in Sybil, meaning they are. You can see the progress bar at the bottom. They kind of start. The market doesn't like them. Then the market starts to like them a little more. Then institutions start buying some calls, right? You get a couple of good earnings reports, and then the stocks just start moving back up. I think Medtronic traded as high as 120 last year, currently trading around 91, right? So, and that's kind of where the opportunity for us comes from. It looks like our open interest progress, we're about 30% of the way there. I want to see more. The last earnings were very good. And to me, this is a good spot for, as I watch the open interest like pile on. Sometimes I'll go a little early if I think the stock is going, but this is a good candidate for stock that will be higher by Medtronic. Okay. So now also because Series Club, we just don't buy the stock. So I buy all the stocks that I recommend in Series Club and the option trade. So I'm investing there with you. But it also tells you the stock to buy, but also what leap option to buy. So here we'll go here. So play, right? So the stock was up 11%, but the options were up 37%. So the idea is you don't want to buy the stock, you're not interested in buying the stock. The whole idea of buying options, you'll get you get that supercharged gain. Now this is a good one too. Teladoc, stock was up 42%, but the options we closed were 65%. And then again, this is a little stock like CNH. They make case tractors. Not quite as sexy as Caterpillar, but a 9 stock gain translated to a 67% option, which I think is pretty great. So you have more upside when you trade the options. Of course, you could do things like I'll sell one of my options and keep the other one for a run, especially once your trade is already basically financed. So you have plenty of time before they expire. That's one of the great quantities of leaps. And the thing that I learned early on was like long-term options don't decay like a 1-month option or a 2-day option. They decay very, very slowly. Because a year is forever in option land, forever. So the part of the strategy, if you like to looking at stocks to be an investor, is like trying to find those stocks that are going to have that long run. So the stock can be flat for 2-3 months. You get a little pop, and your option trade makes money. So they don't really lose a lot of their value in the first 1, 2, 3 months. And again, we can hold these options all the way until expiration if you want. But as trades start to come into the position, I like to start to close the winners. Writing the winners up so we can make room for more trades. Right now, we are holding around average time is around 20. I want to say like 2 to 3 weeks, maybe average hold time for our trades. Now on our option side, we're 9 out of 10. We have a 23% win on average, and we are putting on a new trade today, maybe two trades at 1 p.m. today. So for all of you that are interested and see what this tool is about, I want you to come and check it out. All right, so here's what I want you to do. All right, so here we are. You're invited to join us in the lounge. Right, we have our 24/7 chat room at 1 p.m. So I'll be walking through the basics of the Sybil system, the fingerprints we watch, how she crafts the trades, and then we're going to enter, the new trade step by step. Now, right, so this is part of my retirement strategy. This is also how I find stocks that I want to buy. It's great to have some Mag 7, which I do. I own some Mag 7 stocks, but I have gotten great returns using this system since I actually started doing this at OptionPit the last 3 years. We found great names, Hood, Palantir, stuff like that. There's really fantastic names that have really jumped. So the idea is, right, I'm going to continue to use it looking for long-term investments, right? So I would like you to come join me. Quarterly membership right now is $9.95. If you want a different membership, call in 888-872-3301. If you want to see how this trading system can work for you and to look for stocks that are going to perform in the second half of 2026. The first half of 2026 was tech. Huge, okay? But now you want to start looking for stocks, again, in my view, that are going to perform well, that can start taking advantage of all the things that AI is bringing. And that's, basically it's another thing. Institutional interest, they're doing all the research and they're going and buying all the calls. And our job is just to go find them. And that's what Sybil does. So we're going to do it at 1 p.m. today. We'll have 2 trades, likely 2 trades, I believe. You get your detailed monthly portfolio updates, 3 different types of trades that we can put on. Again, we have a little community in there in the live chat room. And also, if you have questions about other stocks, are they on the list and how to use Sybil? We answer all that too. Anyway, I'm getting close to the end of my time. Again, ask the team 888-872-3301. If you want to see Sybil for yourself, check it out. Remember, we always have that 14-day money-back guarantee. If you don't like what it is, you could always ask for a refund, and we will give it to you. But I think this is this product is done way better than I thought it would. I'm just thrilled that it's doing basically exactly what the back test did. That was crazy. I think it'll actually do better because we have a lot more different opportunities that Sybil presents us with. But right now, the fact that it's doing exactly what the back test did was pretty fantastic. I want y'all to come check it out. So anyway, 1 o'clock, call the team 888-872-3301. And for my Rip Zone people, I'll see you in a couple of minutes. All right, everybody. Thank you very much. And as always, thank you, Amin. You guys have a good day. Bye-bye.